There was an interesting survey recently of fund managers, and they asked them, what is your outlook on U.S. profits over the next year and emerging markets profits? The sentiment around the U.S. profit picture over the next year was the highest it's been in 17 years. A net 60% of fund managers had a positive view on the U.S. A net 40% had a negative view on emerging market earnings prospects. I don't think that divergence can continue. I think either the trade rhetoric tampers down, the dollar settles down, in which case emerging markets are going to catch up, or if things really escalate on the trade front and the dollar continues to rally, I don't think the U.S. is going to be as impervious as it has been so far from a market perspective.
But it just looks like, I mean, there's a lot of bluster, Noah.
Yeah,
but when it comes down to it, we seem to, both sides seem to come around.
You opened dairy a little bit, but I think that the rules of origin that were in that deal are much better. I think the content in automobiles.
But doesn't mean we do something with China.
But I think a lot of people don't realize that this is a little bit more of a chess game, and the people who are negotiating it from the U.S. side, if you look at those rules within NAFTA, including getting rid of the deal if somebody does a deal with China, non-market economy, which I think in the deal refers to China, this is a first move in a longer negotiation with China, which really strengthens North America in terms of rule of origin and content. And I think this actually strengthens the bargaining position versus China in the next round.
It's interesting because the rules of origin, that's something that basically everybody points to and says it's China that gets around that by shipping all of
into
that stuff
Canada
to Mexico.
Into Canada,
yes.
Yeah. And, the content per vehicle going up for North American. There's a lot in there that might be playing for the next negotiation in this existing negotiation, which is China. So, I think it's going to be a longer negotiation than people think with China.
The yield curve, Stephen, you said that it can be a year, that it may indicate some things about the economy, but not necessarily about equity prices. So are we on the clock now that if it inverts that we only have a year left, or?
No, when you look back over the last 50 years, we've had 7 economic cycles, yield curve inversions. It's been a good predictor of the recession. But what you find is it's not a good predictor around timing equity markets. Markets tend to peak about a year after the yield curve inverts. And you tend to see some of the strongest returns in that last part of the cycle. So on average, you get about a 13% return in the year ahead of inversion, and then another 20% before markets peak. So even if you think that inversion is coming, the yield curve is flattening, that doesn't mean you should be selling your stocks. You want to stay invested.